Hello, my name is Michael Stoller, host of the Stoller Report and moderator of the mTrust Title webinar series. Steve Napolitano, Senior Executive Vice President. Today we're having an interesting topic called data centers. With more people staying at home, working at home, data is the important element of the world today. More and more data centers are needed and there are different requirements. So today we have an investment banker who's involved with the data center and telecommunications business, and we have a banker who's involved with the data center business. Our guest today includes Jerry Tang, who is the managing director, the head of the industry group and global financial sponsors, real estate and hospitality for Natixis. We have Joe Valenti, managing director, head of the telecommunications group at PJ Solomon. So who's going to define what a data center is? The tech guy? I mean, both of you are tech guys in ways.
I'll kick it off, I suppose. And thanks, Michael, for moderating today, and for mTrust for having us. Look, at its most simple level, a data center is a storage facility for information. It's a place where enterprises, cloud providers, telecommunication networks can place their equipment, their server infrastructure, so that data can be stored, computed, and exchanged amongst other parties.
Who are the top companies today in the world in the telecommunications? People don't realize that Amazon and Google are there, but who are the leaders?
Well, geez, that question probably requires a pretty broad definition and maybe a segmentation, if you will, of communications, right? So, you know, at one level, you have the names of folks that we all know, right? The folks that operate our mobile phones and our fixed line services. So the Verizons, AT&Ts of the world in this country. As it relates to this particular topic around real estate and data centers, there are a handful of global players who are the key leaders, the publicly traded REITs, Equinix, Digital Realty, CyrusOne, CoreSite, folks along those lines. You know, those are all the folks that actually own the infrastructure, own the buildings themselves, and the associated mechanical equipment and power distribution units to allow their customers to co-locate servers for purposes of the applications that they're serving.
Jerry, how did Natixis get involved with financing of the data center world?
Yeah, so we see data center from two, I guess, sectors. One is obviously real estate. It needs a place to hold, you know, the equipments, buildings, infrastructure for the data centers. The other way is really we see the inherent contractual nature of the data centers, where it's a infrastructure that's contracted to many customers. So we see it from an infrastructure perspective as well. It's an extension of our C-fiber, fiber, and a tower business. All kind of a data, if you will, data infrastructure financing business.
Let's talk about the tower business. Joe, you've been involved with the tower business. I think you even sold a company in the tower business. What's the difference between the tower business and the data center business?
Well, I think there's a couple of key differences, although they both enjoy the secular trends of being part of the communications infrastructure ecosystem. You know, basically they're both you know, the infrastructure that allows communication to take place, although serve different purposes. You know, on the tower side, there's a specific role and focus. It's basically to facilitate wireless transmission of information. The tower market has been largely consolidated in this country amongst three main public players: American Tower, Crown Castle, and SBA. Although there are a number of private companies that have grown significantly in scale and size, like Vertical Bridge and a handful of others. You know, key difference I would articulate between tower companies and data center companies One, on the tower side, in addition to only having really a handful of customers that are co-locating on your tower infrastructure, generally speaking, all the contracts tend to be longer in duration, and they all tend to be with well-capitalized credit tenants. So your key customers are Verizon, AT&T, and T-Mobile. There are others, but those are the large ones. So you have this customer concentration dynamic that's at play. And tower companies rightfully trade in the high 20s and even low 30s at times, which speaks to largely the durability of that revenue model and the durability of the customer base and the ubiquity and importance of having wireless services be available to the entirety of the country. Data centers share, in a lot of regards, a similar economic model in terms of being critical infrastructure, in terms of having generally long-dated contracts. But I would argue that there is a broader spectrum of offerings within the data center space, and I'm sure we'll talk about those on this panel, everywhere from the large million-plus square foot facilities that an Amazon or a Microsoft or a Google is using, all the way down to what we call edge or containerized data centers that sit at, sometimes even at the base of a tower where compute is taking place, right at the spot where wireless transmissions are occurring. The other key difference in the data center space, I would say, is in addition to the diversity of the customer base, is the duration of the contracts. There are some that are focused more on the big public cloud providers that have very long dated contracts akin to towers. And when you look at valuations in the market, a lot of those businesses will trade on a private basis that looks and feels and smells like a tower company. But there are several that have much shorter contracts, the more retail-oriented data centers where people are taking smaller square footage within a facility, and those generally are 3 to 5 years. Both businesses, however, have been terrific performers from an equity perspective over several years, and quite frankly have withstood the test of time as it relates to this pandemic that we're all wrestling with, because the criticality of that infrastructure has become more and more obvious as we all work remotely and plan to work remotely, frankly, for an extended period of time.
In my research, I noted that there are different types of data centers. There's a co-location data center, an enterprise data center, a managed service data center, and the cloud data centers. Jerry, which ones do you like financing, or all of them?
I would say all of them. Follow Joe's comment on these, large public companies like, Equinix, Digital Realty. I'm a guy who have grown up in real estate. So, when I first approached the data center sector, I was amazed at the scale they have. Look at Equinix. It has today it has 62 billion market cap. You're talking about 14 billion for Boston Properties. SL Green is 4 billion. Vornado is 9 billion. Just the sheer scale is just amazing, and the tower companies are even bigger. American
here's the big question. One is bricks and mortar. Traditional real estate lenders are comfortable with bricks and mortars. Now you're lending maybe $1,000 a square foot. You're lending on cash flow and revenue as opposed to the bricks and mortar, correct?
Yeah, it's both. I mean, there's definitely still a real estate component. You still need a place to hold the data center, the equipment, the servers, the cooling systems. And then you have the, data center interior infrastructure, right? But mostly, you're right. I would say 70–80% of that cost structure or capex is beyond the real estate. That's why in a small suburb in Washington, D.C. called Ashburn, you see the data centers are being traded at $1,500 per square foot. For real estate guys, it's just amazing. It's more expensive than a CBD Manhattan Class A office. How do you grasp that? So you have to recognize that the data center market is maybe Joe can elaborate more. It's very I would say concentrated in several top markets. Like in the U.S., you have DC, you have Dallas, Phoenix, obviously Silicon Valley, Chicago. These are the large metropolitan areas that have great connectivity, where you have the internet connection points, key points. You're connected to the internet, and you have plentiful of cheap power, which is essential for the data centers because they consume so much power. That's why when people talk about the data centers, they don't talk about a square footage. How big is this data center? You don't talk about it's a million square feet. You talk about it's 100 megawatts. But generally, it's a 1 mega is about 10,000 square foot.
But I'd say the large locations are 1 million square feet. The center in Chicago, the center of the NSA Bubbletree are 1 million square foot data centers. These are huge. And then if you take into consideration in New Jersey, in Edison, New Jersey, you have the former New York Times headquarters, which is a data center, which is probably 500,000, 600,000 square feet. Yeah. So here's a question which we had yesterday during our pre-call. Can we take a retail shopping mall that's been vacant, no longer JCPenney, no more Kmart or anything like that, and build that and make that a data center?
Yeah, let me take a crack at responding to that, and maybe just by way of framing the size conversation that you gentlemen were having. The largest data center in the world actually is about 6.3 million square feet. It's over in China, called the Inner Mongolian Information Park. China Telecom owns it, right? So the scale of these things is just absolutely enormous. To answer your question, Michael, maybe I'll take it two different ways. First and foremost, maybe reframe it a little bit. Have other properties for alternative uses ever been transformed to be data centers? And the simple answer is yes, they have. There have been, as you mentioned, the New York Times building. You probably are also aware of several other buildings globally that may have been used for things like semiconductor manufacturing, etc. They have all been turned into data centers at this point, and some great companies have been spawned out of those facilities that were overbuilt for the original purposes and then subsequently monetized by smart folks who saw the opportunity to turn it into a data center. That all said, think about the infrastructure that lives inside a data center and how important it is for the customers of those data centers. Most facilities will have at least a 5 nines SLA requirement, 5 nines being the data center has to be up 99.999% of the time or more. And to do that, you have to have a few things. One, you have to have the right physical security for sure. You have to make sure that it's staffed appropriately and has the appropriate fencing and manpower and man traps, etc. But you also have to have the right technology redundancy, right? So that means having a diverse set of fiber providers to take the information that wants to come into the data center and then wants to move out of the data center in a way that protects the users of that facility. So what does that mean? Well, that means that if you had a property that had a single strand of fiber laid to it for purposes of communication, there are very few customers that are going to look at that and say, well, geez, I want to put my critical IT equipment there because the day that somebody decides they're going to dig up the street and fix a sewer and they cut that fiber, all of a sudden that data center is useless. So one or two things happens. Usually the data center provider will seek ways to get other telecom providers, network providers to lay fiber into that facility, and there's an expense associated with that. certain circumstances, those network providers want to be in the facility because there's so much traffic and information that they can move and become customers of theirs. But it's really on a case-by-case basis. There's no uniform, I would say there's no uniform response to, can a facility be turned into a data center? The question really has to be addressed on a bespoke basis as to where it is, what sort of applications might sit there. Because remember, as we were talking about beforehand, some of these facilities in New York have got significant access to, or Chicago or Dallas or the other places that Jerry referenced, significant access to fiber density and connectivity. If you go put a facility out in the middle of nowhere, it's very expensive to go potentially lay that fiber there, even though the cost of the real estate may be less expensive. So you have to be thoughtful about, if you're going to repurpose a facility, well, what applications are going to sit there? If it's something that is more disaster recovery oriented or not latency sensitive, things like your photos on your iPhone. At the end of the day, it's probably not critical if you can't get your photos for an hour, or if it even goes down for a day. You might be irritated and frustrated by that, but it's really not a life and death situation like something related to telehealth or some other critical service. So it really depends on what application is going to go into the facility, and ultimately, can you repurpose it to satisfy those applications?
Jerry, let's talk about specific type of transactions. Before, you were saying to me you have a transaction in the Virginia area. Tell me about the transaction, the amount of financing, the percentage, loan to value, and loan per square foot, and so on.
Yeah, so we were looking at a new construction data center deal where the operator, namely the real estate owner, they have lined up some really large public cloud operator, one of the Google, Amazon, Facebook, one of the firms for a long-term lease. So on that, we were able to come up with a pretty, compelling financing proposal, in the range of 70 to 80% loan to costs, because we were more relying on the lease, what the lease will get us versus, the actual cost. And from that per foot basis, so the rule of thumb is if your land cost is, quote $100 per foot, maybe, I think that might be the going rate in Northern Virginia right now. The infrastructure cost, namely the power distribution units plus cooling fixtures, those will add another $600 to $800 per foot. So you're talking about all in close to $1,000 per foot. And the rents, they, in the data center space, people use in megawatts, terms, but I would translate that into the real estate terms. Rents you will net, I think, between $60 to $80. If you apply cap on that, you're getting, $1,200 to $1,400, which is similar to one of the largest trade that happened, in the past year, where Mapletree bought a couple of data centers in Northern Virginia for $14,000.
Now, Joe, since you're an investment banker, where are most of the financings taking place? Are they being done by the investment bankers, or is it being done through the Natixis of the world, or is it being done by private equity? Where are we seeing, or the bond market? Because, you were just talking about a lease. You can take that lease and you can securitize that bond lease.
Yeah. This is not an effort to avoid the question, but the reality is it's happening all over the place. And I'll, again, maybe segment it because it's tough to paint it with a single brush. So if you look at the public REITs, and I'll use Digital and Equinix and CyrusOne as examples of those, those are all investment grade rated entities that have ready access to both the public debt and public equity capital markets. So more often than not, when any of those parties have capital needs, they're generally using both the equity and the debt markets to facilitate those needs, and the demand for those offerings has been significant. Equinix just raised a substantial amount of equity capital to facilitate its acquisition of some properties from BCE. Digital Realty did a transaction with Interaction, which had a stock component to it, so effectively issued equity in that fashion. So the public REITs have, again, very stable and steady access to the public markets. On the private side, there has been a massive influx of infrastructure and pension fund and sovereign wealth money that has looked to deploy their capital across communications infrastructure broadly, but specifically in data centers, right? Because it's viewed as long-term protected and able to withstand cycles, including the most recent one that we're in, given the pandemic. So, when you think about the infrastructure capital, I'll just use that as an example. There's been probably $175 to $200 billion worth of infrastructure-oriented equity raised in the last few years. Roughly 20 to 25% of that is probably pointed toward digital infrastructure, and that's on an unlevered basis, right? So you're talking about something to the tune of $50 billion of capital looking to find a home in communications infrastructure broadly defined. Now that'll include towers and fiber networks and data centers, but you look across the number of companies that have portfolio assets. Stonepeak, Digital Colony, KKR just announced $1 billion euro backing of a program in Europe to go build data centers. And there are several others that have similar investments across the spectrum, from the Canadian pension funds all the way through the sovereign wealth funds. So capital has not been really I would say a problem for folks in the business. Now, where the problem exists is the person that looks at this space and they say, well, geez, the cash flows here trade at 25 to 30 times multiples, and I see the secular tailwinds going on in the space. I see the growth. I'm going to try to do a de novo build on a data center. People forget that not only is there a high level of expertise required in constructing and building a data center, but the clients that they ultimately want to serve generally have much more affinity to people who have, to use a football phrase, been in the end zone before, right? I mean, you're going to turn over your keys on your critical infrastructure and put your most important assets in somebody else's house. You want to make sure they know how to run the house. And that's where I think some of the challenges related to new upstarts in the sector have come about. Now, folks that have been operators or worked at big operators beforehand and have a credible track record generally find it pretty easy to find that financing. But for folks that decide they're going to go de novo, the opportunities aren't quite as robust.
So here's the question, Jerry, you're competing with all this other money. Why are people going to Natixis as opposed to a private equity or a sovereign wealth fund? What maybe you're pricing too high?
Yeah, we got cheap money.
Speaking of cheap money, so let's talk about a structure of the deal.
Well, Michael, just before you go there, just to make sure that I clarify, my reference was primarily around the equity portion of the balance sheet. Obviously, that equity that the infrastructure sovereign wealth pension fund is providing is being levered significantly by folks like Jerry and his brethren, who are able to do that pretty efficiently.
Jerry, back to you.
Yeah,
$500 million. Tell me how you structure the deal. How many years? How do you look at the lease? What if there's a lease termination on the deal? Tell me how you're going to structure that deal for someone.
Generally, we haven't seen like lots of termination, provisions. I mean, there are several types. If depending on what the kind of facilities you're talking about, be it a cloud, co-location, or retail, or edge, you have a different type of a contract, underlying contracts. So the leverage will vary between these amongst these different facilities. For cloud, if you have a long lease, I think we're comfortable, having much higher leverage than you would otherwise do. We can probably lend up to $1,000 per foot, which sounds crazy for real estate guys to even grasp. For the retail colocation, for example, if you have more turnovers, I think we generally want to be at 65% or lower. So it really depends on types of facilities and locations, connectivities, various factors.
Here's a question for both of you. Is there mezz and preferred equity money available in the financing of a data center?
Yes, there is. Both. There is stretch capital that'll come behind the first lien debt. And there are several funds that do that. You've got a priority claim in the capital structure relative to the equity, and are priced appropriately to be behind the secured lending. And there's also preferreds that have been issued. There was recently one for a company called TierPoint, which Jerry Kent started. Jerry Kent, you'll probably know as one of the legends in cable and towers and now data centers. But he and his team were able to just secure a preferred funding for that capital structure. So,
and what do you pay for preferred at that pricing? 10, 12?
Not publicly disclosed, but you're probably not so far off.
Okay. And what do you pay to Natixis for a transaction, a traditional 65% loan to cost and so on?
Yeah, for a senior loan, we also, many times would bring a mezz player behind us if our clients want more leverage. But generally for senior loans, before COVID, LIBOR plus 150 to high twos, 275. These are mostly syndicated amongst banks, some with low yielding pension funds. And we have seen mezz players asking for high single digit, low double digit. Many of them are private equity, many of them are pension, who are familiar with data center sector. There's a lot of demand for the paper, obviously. And I believe, the Asian investors, one trend is they are warming up to the data center sector as well now. I think that would bring down the yield on the mezz or pref.
So they want to go after the French bank? They're worried that the French bank has too much business? The Asian bank?
I don't see it as a competition. I see it as a cooperation, because we are a senior lender. So we want to pair up with competitive mezz lenders.
What about the world of the CMBS? Both of you on the topic of data center financing via the CMBS world. Joe, how do you look at it?
Well, there's been a couple of transactions that have been done in the space for the types of one of the types of companies that Jerry was describing, those with, particularly with longer dated leases and protected cash flows from credit tenants. So a very efficient look. The infrastructure world has seen asset-backed securitization for a long period of time. The tower companies have been using it for years, extraordinarily effectively and extraordinarily low rates. Now, in this rate environment, and I'm not a financing expert, so Jerry can jump in on this, but in this rate environment, perhaps that relative value is compressed given the low rates that we're operating under right now, because there is a complexity to ABS in terms of reporting and bankruptcy remote subsidiaries and all that stuff. But there have been several companies that have done it. Vantage, a digital colony company, has done it. Stack Infrastructure, which is owned by IPI, another infrastructure fund, has done it as well. And there have been a couple of others that have been able to successfully use the securitization market to get low cost financing. So I view it as just another tool in the toolkit for companies that are voracious users of capital. And if you can secure much lower funding costs by securitizing some of those cash flows, it seems to be a prudent way to approach the balance sheet.
Jerry, you're in certain cases, CMBS market. Have you done any CMBS for data centers?
We have not actually. I was looking at the list of deals we have done in data center space. We did a unsecured lending. We did a balance sheet asset based, but we haven't done CMBS. I looked up the CMBS loans that are collateralized by data centers. I would say most of them, first of all, it's about half a dozen every year that's being securitized in the past few years. So you're talking about $500 million to $1 billion amount every year. Most of them, I would say, are either powder shell, namely they don't have the cooling and the power component, which has high, capex, or ground lease components on the lease fee side. But I think the CMBS market has to catch up with this new phenomenon, which is the data center space is becoming, maybe it is already a real sector inside of real estate.
So we're gonna get rid of the retail sector and we're gonna include data centers. Okay.
But don't expect that data centers to save all the malls.
Okay. Question. What do we see as changes post-corona world in the data centers? Anything over there? Because there were some articles written about it that basically the fact that the shopping, people working at home, more use. Do you see there's extensive growth going to take place in the data center worlds?
Yeah, I think that this pandemic, while tragic in so many ways, as it relates to communications infrastructure, has actually been a bit of a boon. Not only the data center world, but you think about the importance of fiber connectivity and this conversation that we're all having right now remotely. Every person who is working at home, who may have family members at home that are using significant amounts of data, is probably going to think hard about the reliability and the bandwidth that they have coming into their homes. Well, all that information ultimately has got to go somewhere and be exchanged somewhere, and that most often happens, in a interconnection-oriented data center facility. So, all the networks, so the Verizons, the Zaos, the Comcast, and Coxes of the world, have really had to think about ensuring that they had the right robustness as it relates to their network, and a lot of the data centers have seen an uplift in terms of network deployments to ensure that they're able to manage this capacity. So that's been super helpful. The other thing that's been going on is just you think about being a CIO right now. If you're the CIO at any organization, I don't care if it's in technology or real estate or hospitality, you wake up the next morning and all of a sudden you have to send all your employees home again. You better have full capability by that evening to have people up and running and working and absolutely productive. So what does that require? Well, that requires a massive amount of spend and massive amount of spend to provide redundancy. And where is that going to come from? Well, you're going to reserve network capacity on the communications networks, and you're going to reserve, data center space for all your collaboration tools and for disaster recovery and things along those lines. So, this dynamic, just from a working perspective, has created a boon to the data center space. And then you think about all the things that you mentioned, Michael. We're all, using services like Amazon and other ways to get goods that we need from our homes, and that creates the need for all of those companies to make sure that they have the infrastructure to process those orders, to manage fulfillment, etc. It's just a significant tailwind. Just statistically, to give one number out there, so people put it in magnitude. Folks talk about Amazon as the company, and Amazon at a $75 billion revenue quarter. It's $1.5 trillion valuation. It's just astounding to see. But 10 billion of that 75 billion was not from all the things that you think about Amazon, Prime Video, click to get a product sent to your house. 10 billion was from just computing infrastructure, 10 billion in revenue, and that's been growing between 35 and 45% per quarter for several years. It's it's a juggernaut, and I don't expect that to change anytime soon.
So one last question. Do you think there are opportunities for, somebody who's graduating business school? Do you think there are opportunities out there in the telecommunications world and the data center world?
Absolutely. I've got 2 children in college, and one of them wants to be a doctor. The other one is unclear which direction he wants to go. But I've told them both that a degree in computer science is lifetime employment. So I absolutely believe that all of these industries, whether it's traditional network assets or data center assets, I mean, they are a growing sector of this economy. There's a reason that Microsoft, Apple, Amazon, they all have trillion and a half dollar valuations associated with. There's a reason those companies trade so richly, because that's where the growth is.
So I think in summation, we know that the data center world is growing. We have investment bankers who understand the business rather well, especially the guys who run telecommunications for PJ Solomon. We have bankers who understand the financing of the world of data centers, Jerry Tang in Texas. And I'm Mike Stoller, and I'd like to thank you for being here today at this webinar brought to you by AmTrust Title, Stephen Napolitano, Executive Vice President. And this show will be on the Stoller Report in August. See you next week. Thank you.
Thank you.
Thank you. Thanks all.